In the markets and other stocks. Tushar Pradhan, Director of HXGON Partners, is with us on the show. Tushar, thank you for joining in. It's all happening here in the Indian markets over the last 1 week. First, the onslaught of the bears, the kind of fall, FI selling of 50,000 crore rupees in a span of 1 week. And today you are seeing a fairly decent recovery. So tell us what you've made of the price action, all the news flow in the last 1 week, and what have you been doing? Have you used the market fall as an opportunity to buy some stocks?
Yeah, I think it's important to set the context here. I think generally over a period of time now, we've got used to a market which has always been going up. So any disruption to that thought process kind of jars in our minds. But we have to remember that markets are volatile. They will be moody. There will be reasons for the markets to kind of give up some of the gains because of either a geopolitical situation or some event which has happened in the economy which rises to the point where there is lack of confidence, etc. But I think what is very important to remember that these are likely events which is always going to happen. And in a normal market, these are quite healthy to begin with. So that was the first aspect. The second is in terms of have we been doing anything? Yes, we have, because there have been some significant falls in some of the stocks which have made them fairly attractive compared to where they were trading even a week before. So there has been some selective change into some of the more attractive areas. But I must also say that the kind of drop that we have seen in some of the stocks has been not that much as we would have liked it to be. So I would think that this correction is really not a very serious correction. I think with the gain that we got again today, I think we'll just be about 2 or 3% off from the high. But that is not really a serious correction. So to make a very dramatic alteration to a portfolio at the moment, I don't think we'll be doing any of that.
Tushar, hi, great to have you on the show. So, one is the whole China situation, and you've been looking at fund flows for a long, long time. The announcements that we got in the morning clearly were not enough to keep the market's excitement level up, right? Because for a market that's rallied 30% in a year, you really need to deliver. And I guess we didn't see too many specifics on stimulating consumer demand. So what's the sense? I mean, it's just day one, so I don't know if it's too early to say, is the whole sell India, buy China trade, is that over? Could it continue? What's your sense on flows?
Well, I think with my experience in terms of how asset allocators look at countries, they are fairly opportunistic when it comes to moves such as these. And especially on the back of some sustained economic stimulus, it makes sense for an allocator to say, look, this is a market that is so much in a discount zone. It has underperformed for so long a period that if I shift a little bit of money from my regional portfolio into this country, I think the risk reward is very much in my favor. So there is something called as a tactical allocation. And I think what we've seen currently possibly might be a start of a tactical allocation. As you mentioned, it is just day one. The announcements have just been made. So we don't really know how that translates into the real economy within China and what does that stimulus really mean. I think the biggest stimulus recipient will be the real estate sector, which has been the talk of much of the drawdown in China over the last 3 years, I would say. Most of the crisis around the banks and the lending situation really centered around the real estate issue and how they were going to recover from such a big loss of value in one sector. I think once we start addressing that, the stimulus and the consumption will pick up in China. But all of these things are economic in nature. When I say that, it is going to take quarters, even a year, before we can actually start the change happen. Of course, markets don't wait for it. But even from a market's perspective, I would term this move into China by some of the foreign allocators as a tactical move. It's good to increase your allocation right now, just in case that we were caught, not having any China exposure, etc. But I think a concerted effort, a significant shift in allocation will only happen over a period of time. And that depends on the fact that all of the other competing markets have to now give up some of their attractiveness for China to become really, really attractive. So I don't think we are very close to a big shift into China, but I think it's just maybe the start of a bigger move later on.
So this correction was not a very serious one, but Tushar, what have you made of the kind of earnings updates that we've got across sectors, whether it's real estate? So today you had Shobha coming out, multiple banking updates have come through. The consumer updates have not been very inspiring across the board. Do you think that can act as a bit of a trigger for some price correction from here on, which could be more meaningful?
Yeah, I'm very happy that you brought that up, because even if you supposedly had earnings delivery. So if you were expecting, say, a 20-25% earnings growth in a certain company, it delivered 25%. But the sentiment was so that they would say, well, it's just delivered in line. That would mean something. Now, on the other hand, when the sentiment is that we don't really expect much out of this company, and oh my God, it's delivered 25%, the upside to that move is significantly higher. So it is not important just to look at the level of earnings, but where the expectations are and what they will drive the markets to do. So today we all agree that a lot of earnings growth has been baked in the current valuation, which tells us that even if you have companies which are delivering between 15 to 12 to maybe 18% earnings growth in a year, it may not be enough for the market to move up from here. And if at all, there might be even a time correction over time before the valuations adjust to the earnings maybe a year in the future. Having said that, I think there are pockets where the surprises will continue, both on the upside as well as the downside, which makes for a very interesting market. And I'm happy to have interesting markets, because that is really where the alpha can be generated as opposed to a general direction in the market. I hate to say the word projection, but my expectation is that the market is largely going to be flat from here. But that does not mean that you will not find exciting opportunities in the market. I think there will be companies which will be discovered, which is the normal case in most markets as well. At the same time, you will get tired of companies which have delivered significant earnings growth, not in the past. In fact, I just heard discussions on Titan, for example. I think this is a company which has delivered, continues to deliver. But there is a certain amount of fatigue which sets in, and I'm not taking that as a single example. And over time, the fatigue translates into pretty tepid performance at the stock price level. So I think we have to sift through all of that, and that makes for a very, very interesting market ahead of ourselves in the next 6 months, I would say.
Tushar, just a quick word, talking about exciting opportunities. The Hyundai IPO is upcoming tomorrow, we understand. I think the price band will be revealed, so there is a lot of chatter about being $18 to $20 billion in size. But is Hyundai an exciting opportunity for you?
Good question. I think it is something to do with the relative attractiveness of what is available in the auto pack, right? So here is an exposure which is pure passenger vehicle. Here is an exposure which, probably in some way competes with the market leader. But we all know that the market leader is by far significantly ahead of everyone by market share. And we are talking about only incremental market gains from here. I think, per se, if someone wants to have some bit of a diversification in their auto exposure and to reduce risk to any one significant number or a name, I think it provides for a significant avenue for portfolio diversification. On its own, I think everyone has to find out whether the price merits the earnings prospects. We all have to remember one thing, that automotive companies are extremely cyclical in nature. One looks at it from a fundamental perspective and understand there is a cycle to demand, there is a cycle to inventory, and there is a cycle to cost. If we are positioned in a way where you're going to take off in demand and delivery in the volumes, I think that's the right time in the cycle to hit it. But if you're coming off of a peak, and if there is any hint of either a flattening of the demand curve or even a reduction, I think auto stocks then don't do much for a while. So I think the valuation, while on an IPO basis, is always important to kind of see as a point of interest. But I think from a longer term, you have to look at all of these factors to decide how long you want to keep it and how does it fit into your portfolio.
All right, Tushar, appreciate you joining in, giving us your view on markets and a couple of sectors that we discussed as well. By the way, keep an eye out on